Very good morning. Very happy to comes before you with one more session. So in the last class, we were started discussing SPM. We discuss about what is mean by performance evaluation, what is mean by performance management, concept of performance management, components of performance management, how can you differentiate performance management and performance appraisal, and also what is mean by productivity, what is mean by efficiency, what is mean by performance. So continuation to that, today we gonna discuss a topic which came recently for your exam also, financial performance evaluation. Financial performance analysis. Financial performance analysis. What is financial performance analysis? It refers to degree, it refers to the degree in which company able to achieve the financial goals. It mainly measure financial performance analysis. Financial performance analysis mainly measure strength and weakness of an organization. Strength and weakness of an organization. So we can say it refers to the degree in which the organization is able to achieve the financial objective, or it measures the strength and weakness of an organization. This financial performance analysis we can use as a short term or long term forecasting. We can make it as a short term or long term forecasting. So financial performance analysis refers to the degree in which the company is able to achieve their financial goals or objective. It measures the strength and weakness of an organization, and it is also a short term and long term forecasting. So in financial performance evaluation, we basically measure two things. One is we are measuring the financial position. How a organization financial position. Similarly, next one, financial performance. Financial position we can get understood from the balance sheet. Financial position we can get understood from the balance sheet, and the financial performance we can get from the trading P&L account, that is profit and loss account. Trading P&L account. So how and all we can able to tools, what are all the tools available? Generally we use working capital ratio. Working capital ratio sometimes we call liquidity ratio, ability of a firm to meet the short term commitment. Current ratio, quick ratio, asset interest ratio. So you might have been learned in your intermediate level. The next day, financial structure ratio. Financial structure ratio tells the level of debt and equity of an organization. Debt to total fund, equity to total fund, debt to total fund, proprietary ratio, capital gearing ratio, all will come under what? Financial structure ratio. Financial structure. Next we call, generally we use activity ratio. Generally we use called activity ratio. Then another one, profitability ratio. Profitability. Apart from the, we have coverage ratios are there, investment ratios are there, but generally we call the tool mainly working capital ratio, financial structure ratio, activity ratio, profitability ratio. Okay, good. Now we gonna discuss the main thing in this area, types of financial performance or financial analysis. We can classify two types. 1 is material used. 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 1 Material used. Financial analysis can be typed. One is on the basis of material used. We can call internal analysis. And just opposite to that, external analysis. What is mean by internal analysis? What is mean by external analysis? Internal analysis means the financial performance analysis done within the organization. The person who can access to the financial information. It is done by the internal employees or internal auditors, the court who can access the books of accounts. So within the organization. External analysis means the analysis done by the external party who cannot access the books of accounts. They can access only the published information, that is balance sheet and P&L. Bank before giving loan, then creditors, students like you for study purpose. So this all will come under what? External analysis. This all will come under what? External analysis. Another we call it, this is a previous year question also, modus operandi. How you will take it analysis. Modus operandi. How you will take it analysis. So you will take it analysis mainly two-way, horizontal analysis, vertical analysis. Horizontal analysis and vertical analysis. So what is mean by horizontal analysis? Horizontal analysis means you are comparing the financial performance over a period of year. What is the last year performance with current year? What is the last 2 year performance with current year? So financial performance comparing with the previous year with current year, that is what horizontal. Then what is mean by vertical analysis? So here previous years are compared. Here similar firms in the same group company. Vertical analysis. Tata having lot of companies are there in the group. Reliance having lot of companies. So Reliance Jio is comparing with Reliance. So same group companies are analyzing. So that means vertical analysis, you are comparing your performance with other companies under the same group. Whereas horizontal analysis, you are comparing your performance with over a period of year. So don't get confused on horizontal and vertical. Horizontal means over a period of year you are comparing. Whereas similar companies or same group companies you are comparing, that is what is called vertical analysis. Yes or no? Now what are all the main types? Generally we call three types. Tools of financial performance. In our thing, the first one, it is nothing but accounting ratio. The first one, it is nothing but accounting ratio. So what is mean by accounting ratio? Accounting ratio is our ratio analysis. Accounting ratio is what? Our ratio analysis. It is one of the useful tool for measuring the financial performance. We have our liquidity ratio to measure the firm's ability to short-term liability, where current ratios are there. Then working capital ratios are there. Then we call it as liquidity ratio or acid test ratio. The next is called profitability ratio or long-term solvency ratio. Long-term solvency or financial structure ratio, which will measure the company's long-term fund. Then activity ratio or turnover ratio, working capital turnover, asset turnover ratio, capital turnover ratio, debtors turnover ratio, creditors turnover ratio, inventory turnover ratio, all will come under activity ratio. Then profitability ratio, which will measure the profitability, gross profit ratio, net profit ratio, operating profit ratio, all will come. This all you have learned in your intermediate level itself. You can even go for coverage ratio, interest coverage ratio, preference dividend coverage ratio, equity dividend coverage ratio. Everything can be covered under accounting ratio. Everything can be covered under accounting ratio. Are you clear? Then you can take another one, common size balance sheet. In your degree or graduation or you might have been discussed. The balance sheet is taken into 100. Then each element will be taken into what is the proportion. This can be analyzed over a period of time. That is what called common size balance sheet. Then we have another one topic called trend analysis. Another one topic called trend analysis. The previous trend or the trend of can be used for measuring. In your intermediate operational management, you might have been learned a lot about that. See, in your syllabus, they are not discussed in detail. So this is what we have so far discussed. So we were discussed on what is mean by short term, long term, then it is balance sheet, income statement, working capital, financial structure, activity, profitability. Then coming next, external or internal or horizontal or vertical. Then this is what we discussed in your syllabus. They are not discussed in detail. Carry liquidity, capital structure, profitability. This came for December 2018 for your exam. Then common sense financial analysis. That is what we have discussed. Trend analysis also. So it's very interesting area. Easily we can able to approach. Okay. So my dear friends, we have discussed the one of the recent exam topic, financial performance analysis. Yes. Now we will move to next topic. This topic very important for your exam. This topic is very important for your exam. The topic is called supply chain management. The topic is called supply chain management. Very important for your exam. My dear friends, today the mobile phone or laptop what is in your hand right now is as a result of efficient supply chain management system in the country. Today, if in your home you can able to get variety of fruits as a result of efficient supply chain management, my dear friends. Today, if you are able to watch or if you are able to use any modern technology or any resources, it is because of that efficient supply chain management. So, very important topic. The term supply chain management was first used in the Financial Times in an article. In a Financial Times in an article, by whom it is used to by in a Financial Times an article. It is a term first time used. Oliver and Weber. Oliver and Weber. And my dear friends, you know which year the article came? Which year? Never. It is not so long. These are all the new technique, post-industrialization, new technique which has been brought, which has made a great impact in the entire production and it crossed the territorial boundary or traditional boundaries. It is in 1982. So the term supply chain management was first used by Oliver and Weber in a Financial Times article in 1982, which means supply management or what, supplying or procuring or procurement, whatever it is. In earlier time, it was mainly focusing on purchasing decision and cost reduction. Purchasing and cost reduction or sourcing and cost reduction. But later on, the relevance of supply chain has been entirely changed. Earlier it was only for purchasing and cost reduction. Later it has been entirely changed. We can say supply chain management encompasses entire activities involved in sourcing, Sourcing means from where we have to buy, internal or import or other way, we will take it from in the country itself. X supplier or Y supplier, what quantity, everything is discussed under what source. Then procurement, bringing. Then production, we call conversion. Then reaching into customer, we call logistic. So supply chain management encompasses entire activities. We can call it as entire activities involved in sourcing, procuring, conversion, logistic activities. Supply chain encompasses entire activities involved in sourcing, procurement, conversion, logistics activities. When we discuss the supply chain management, first we should know what is meant by supply chain. The term supply chain we can call, it's a logistic network of, it's a logistic network of suppliers, manufacturers, then warehouse, then retailers, wholesalers, entire segment. See how interesting. Supply chain is a logistic network of suppliers, manufacturers, warehouse, retailers, wholesalers, everything. So we were started discussing the term supply chain origin. It was in 1982 by Oliver and Webber. Initially, it is mainly procuring activities and cost reduction. Procuring activities and cost reduction. Then we discussed. Now we gonna discuss the first topic in supply chain. We have discussed an overall idea of supply chain. Now we were gonna discuss objectives of supply chain. The first objective, supply chain management take into consider every facility which has an impact on cost. So whatever facility, not only the purchasing, any facility which has an impact on cost will be considered in the supply chain and makes conform the product, make product conform to the customer requirement. That means if you are reaching the product as per the customer requirement. What is customer requirement? Right product ordered by the customer, right time, right place, right quantity. Yes or no? How wonderful the word. So the main objective is what? You have to ensure that the product is as per the customer requirement. You have to ensure that product is as per the customer requirement. Next, supply chain ensure effective and cost effective and efficient across the system. That is, any non-value adding activities, any unnecessarily activities will be eliminated. Only value adding activity will be concentrated. So we can say supply chain ensure cost effective. So it should ensure cost effective and efficient across the system. We can tell one more objective is discussed in our syllabus, which tell that supply chain integrate. Definitely yes, it integrate. Who all? Supplier, manufacturers, warehouse, stores. That is from supplier place to manufacturer place, from manufacturer place to warehouse, from warehouse to stores. Finally, it reached the ultimate customer. So supply chain managers help the organization to reach from or to procure from the raw material source to ultimately reaching into the customer hand on time without reducing the quality, without compromising the time. So this is the main three objectives of supply chain management. See, for our exam is concerned, what are all the topic or point discussed in our syllabus, those points we have to highlight for your exam. So in our study material, three objectives are discussed for supply chain management. The first one, supply chain management take into consider every facility that have an impact on cost and product makes and that makes the product conform to the customer requirement. That means your entire transaction or entire movement of goods that should meet the customer requirement as per the customer criteria. Then it should be cost effective and efficient across the system, and it should integrate from the manufacturers to the from the supplier to manufacturer, from manufacturer to warehouse, from warehouse to the stores. So this is how main objectives of supply chain management. Going further from the objectives, next will come components of supply chain management. Components of supply chain management. In the last session, we discussed components of performance management. In the last session, we discussed components of performance management. Can anyone of you recall what are all the components of performance management? Can anyone of you recall what all the components of performance management? Yes, you are correct. Performance planning, performance evaluation and reviewing, feedback system followed by personal counseling and performance facilitation, rewarding good performance, improvement plan, and finally, but not the least, that is potential appraisal. Now, the same way, we gonna discuss today components of supply chain management. We gonna discuss today components of supply chain management. So, what are all the components of supply chain management? First one, anything plan. See, if you want to bring something, if you want to buy something, you should have some production plan. What is your requirement? That is to be defined under the plan stage. So what quantity to be purchased, what is the item to be purchased, from where to be purchased. These first stages of analysis will come. Next will come that you identify the supplier, ensure it reaches to your factory. So plan, source. Source means procurement, selecting the vendor and reaching it in your factory. So plan, source. Source will help you to bring the product into your warehouse, bring the product into your factory production, from where to buy and how to reach your factory, whether by road, whether by rail, whether by air, or whether by water, whatever it is. Everything is discussed under source. So once you reach in your factory, so you decided what to buy, what quantity to buy. From the source, you reach it your factory. Once you reach in your factory, what is the next stage? Yes, you are right. What is the next stage? You want to produce the product. That is next stage. Plan, source, make. Make will tell conversion of raw material into finished goods. Make will tell you conversion of raw material into finished goods. We are making the manufacturing of the product, input into output. This is what making in the stage make. We have to ensure that the products are produced at a low cost without compromising quality, and the production is completed on time as per the customer requirement. Products are completed, production are completed on time as per the customer requirement. So that will be ensured under the make. That will be ensured under the make. So plan, source, make. Next will come deliver. Next will come what? Deliver. What is the meaning of deliver? Yes, the product manufactured in the factory has to reach to the ultimate customers. Has to reach the ultimate customer. No customer will visit your factory to buy the product. You have to ensure that it reached your hand. It reached the customer hand by warehouse, by stores, by wholesalers, by retailers. You want to reach the customers. That stage is discussed under what? Deliver. So plan, source, make, deliver. Plan, source, make, deliver. Definitely, it is very difficult. All customer is satisfied. If you want a long-term growth, you want to ensure that your supply chain system should promote return also. That means if a customer is not satisfied, if you want to return the product, if there is a damage in the product, you want to get claim the warranty or guarantee, whatever it is. So the system is to be more fast, then only the customer will be satisfied. So this has to be fulfilled in our supply chain management. So we have one more stage called return. We have one more stage called return. So what role there? Plan, source, make, deliver, return. Plan, source, make, deliver, return. So from where we started discussing, first we discussed what is being by supply chain management. It was earlier, it was just a sourcing activities, or it is purchasing activities and cost reduction. It was first used in 1982 by Oliver and Webber in a article. Later on, it has got its own advantage or its own recognition. Then we generally call supply chain management encompasses entire activities involved in sourcing, procurement, conversion, and logistic activities. We can say call it as supply chain is a logistics network of suppliers, manufacturers, warehouse, stores, retailers, wholesalers. We have mainly three objectives of supply chain management. The first and most objective that a supply chain management should ensure that it has to consider every facility which has an impact on cost and the product conform to the customer requirement. Then supply chain is to be efficient and effective across the system. Supply chain should integrate the manufacturers, suppliers, warehouse, stores. Then we have discussed now components of supply chain management: plan, source, make, deliver, return. So we have discussed now main three topic of this area. Now we will move on to what role the advantage or what role the specialities of supply chain. Are you ready? Are you ready? Yes. So before advantage, we will move to first importance of supply chain. Important. Let me tell, managers nowadays recognize that, see, there is a substantial advantage if you deliver faster than competitor. Yes or no? You order food in, let's say, Zomato and Swiggy. Maybe you get little offer in Swiggy, but Zomato person deliver fast. So next time when you order, since the Zomato deliver very fast on time, I'm telling example, maybe X depends upon your experience, it may differ. So you may order Zomato only because there is a substantial advantage from the competitor if you deliver fast. That we call it as competitive advantage. Competitive advantage. Similarly, supply chain helps you to make it the re-engineering global re-engineering. You have to change the entire system, and it also help you to sourcing the product or outsourcing. You can go for outsourcing also. Then, if you fast delivery, if you make a fast delivery, you will get more sales because you are completing fast. There is a substantial increase in the turnover, substantial increase in the turnover, which will also help you to increase your profit, which will also help you to increase your profit. So these are all the main importance of supply chain management, which is in detail discussed in your material. So already we have discussed there is a competitive advantage, there is a re-engineering, globalization and outsourcing. Faster product delivery will increase your sales. substantial profit advantage, then this will have a moving goods very faster than anyone. Yes, now we will move on to the benefit. I think you can tell everything about benefit. First of all, you need to order what is required. That is what is called perfect ordering. You can give what quantity to be ordered, it on time it will reach perfect ordering. See, satisfied customers will help you to increase your brand image. So brand image will boost. You can able to make a customer service excellence because customers are happy. Satisfied customers are brand ambassadors for you. So the detailed things is given here already. So I don't want to go for first. So first customer service excellent program, then brand image, then service excellent program, perfect ordering, knowledge exchange. What is meant by knowledge exchange? See, nowadays in logistic network, if you have that number of the courier or whatever it is, you can right away check where is your courier right now, where is your raw material right now, whether it is moving or not, where the lag is coming. Everything can be discussed there. So knowledge exchange. Then excellent customer service relationship. Finally, if you fast delivery, that will boost the consumer satisfaction. This is only discussed in your syllabus, but I have brought additionally one topic, problems addressed by supply chain management or addressing the problems in the supply chain management. This is I given additionally. These are all the distribution network problem, the strategy, how to make it, the loss information, inventory problem, cash flow problem. So this is not in your syllabus, but I have given for you as an extra conceptual understanding because when you discuss the advantage, when you discuss the importance, you should address the problems in the supply chain. That is what we are a professional students. So our knowledge should not be limited to the topic which is in the syllabus. So that's what I have taken this topic which will help you to increase or your view on supply chain in a broader manner. So supply chain, what role we have discussed? We have discussed it was given by Oliver and Weber in 1982. It is a purchasing and cost reduction activities. It encompasses all the activities, sourcing, planning, sourcing, procurement, conversion, and logistic network. It is a logistic network of warehouses, distributors, everything. Then we discuss objective, mainly three objective we have discussed. Then we have start discussing about components, plan, source, make, deliver, return. Then we discuss importance. Right now only we discuss importance and benefit. Address I told you can able to take. So my dear friends, so far today we discussed only two topics: financial performance analysis and supply chain management. But I will tell you any one topic will test for your exam. I am telling you any one topic will test for your exam because both are very important. In this supply chain are very important. Both are very important. In this supply chain are very important. So this is our second class for the SPM, and if you look into that, we have completed now two-thirds of the chapter. In the first session, we have completed the one-third of the chapter. Now we have completed the two-thirds of the chapter. If you come back, if you come into this customer relationship, we have only now two topic is pending in this chapter. Customer relationship management, which is also a regularly coming for a question for your exam. Then we have another one topic called customer profitability analysis. With that, this chapter is getting completed. So my dear friends, as I was highlighted in the first class, strategic performance management is a very good paper where you can score good mark. Very good paper where you can score good mark. Our entire objective is to, we will ensure entire syllabus will be completed, whether it is small topic or a big topic. And at the end of the last class, I will tell you very important for your exam where you have to focus. Very important for your exam where you have to focus. And in our coming classes, as you know, we have some problems areas also. So we will balance problems and theory in the class. So in a class, if it is a 45 minutes class or a 1 hour class, half an hour we will discuss about problem or 40 minutes or 30 minutes we will discuss about theory, so that we can balance the both problems and theory. So very happy to come before you with a new class today. Hope your studies are going well. Wish you all the best. God bless you.